This is an interesting point here with regard to just how much the earnings story is factoring in. You look at the charts quite often, but do the fundamentals of these earnings reports now translate into what you're seeing in the charts and vice versa?
Good morning, Dom. I think the answer unequivocally is yes. I don't think earnings season is nearly as bad as I think a lot of strategists have been forecasting across the street. And the charts, they're forward looking. They are a leading mechanism for this market, and the charts have been steering us in the right direction. And I think we're starting to see the earnings reports coming in for a lot of companies. Not all of them, Dom, but a lot of them are looking constructive and sort of supporting the price action that we've been seeing.
All right, so there is positivity in your mind here. What exactly is the focal point of that positivity? Does it remain those so-called Magnificent Seven companies, the large cap tech, media, and telecom companies? Or is that broadening out trade still something that is going to be focused on for the next, say, 6 to 12 months?
Dom, great question. A lot to unpack there. First, what is the focus? It hasn't changed. When you look at what has been working in the market over the past 12 months, and you look at what has worked coming off of the April lows, it still continues to be very much tech, and that's AI related and also crypto related coming off of the lows. So whether that's things in the industrial sector, whether that's things in technology, all these pieces continue to do well and continue to be leadership in this market. And Dom, when the leadership doesn't change, when you have these corrections in the market, that's a sign that the secular or longer term bull market is still intact and hasn't changed. And from our perspective, we're seeing the market broadening out. We've got over 50% of all the stocks that we track here at Piper are still in some form of an uptrend at this point in time. We continue to watch breadth measures on a larger basis, continue to be supportive. There's one thing that it hasn't improved quite yet, Dom, that I'm watching is, are we going to get more new highs in some of our industry groups? And if that continues to sort of go sideways for a while, that could tamper things down just a little bit. But looking out longer term from here, there's definitely upside to our 6,600 year-end objective as we think about 2026.
All right, 6,600, it is an optimistic number out there. That implies that we're going to have more upside to come. We're also in a seasonally weaker time of the market between August and September. Are you saying that based upon that, again, the caveat always is past performance, not a guarantee of future performance, but if we were to see a pullback, some kind of downside volatility over the next couple of months, you would say that that's an opportunity to add to positions?
Dom, that is absolutely 100% correct. We think this is an opportunity to be buying the dips, not selling the rips in this market. We continue to think that the rationale for that is when we go out and we look at the number in dollars of assets that are sitting in money market funds compared to the total assets out there, it's still at elevated levels. The sentiment with a lot of investors is still in this kind of FOMO mode, fear of missing out. And with those elevated cash levels, investors are going to need to buy the dip. So to answer your question specifically, you are correct that typically August, September are seasonally weak months of the year. I don't think that's going to really play out this year because investors are chasing. Any pullback is going to be welcomed, and they are going to be buying those pullbacks, just like we saw, Dom, last week with the sell-off on Friday and those jobs numbers come in on Monday. People had their buying shoes back on, and this market's off to the races again and continuing to work higher.
All right, Craig, before we let you go, as you scan the number of charts and setups that you kind of follow on a daily basis, what seem like the most attractive to you, whether they be stocks or sectors?
Well, at this point in time, the most attractive sectors continue to be technology, industrials, and also the financial sector. Individual stocks, I would call it this morning. Take a look at the chart of Bank of America. Also, take a look at Oshkosh, OSK. Again, Dom, look down cap. There are a lot of great looking charts down cap that continue to look constructive. And then lastly, something that a lot of people aren't talking about, the housing stocks are really starting to turn their head up. So if you look at things like Lennar or Horton, or you look at things like IBP or some of those kind of names, those all look constructive on the charts. And that is something different than what a lot of people on Wall Street are looking at now. That's a bullish sign for the market if the housing stocks are starting to come to life on the charts.